How to pay off a mortgage in retirement. So today, about 50% of retirees still have a mortgage. Now, in and of itself, not a big deal. It does affect their monthly cash flow. And so what I've seen over the last 4 years, meeting with many people, many retirees who have a mortgage, is a few things. So one is they were refinancing for a better rate, right? So to decrease their monthly expenses. They really might have been better off doing something different. You stick around, I'll mention that at the end, what I think might have been a different option. And one idea is to liquidate assets, liquidate investments, and take a lump sum and pay off the mortgage. Now, what's the benefit of that? Well, there's actually a couple of benefits. One is people, especially retirees, can have concerns about seeing their retirement accounts go down, right? So this year, 2022, the market is recovering currently. Over the course of this year, it has been down as much as 30%. And so that's stressful. That's stressful for people in their 50s, let alone people who are retired and they're seeing all the money they have and all the money that they intend to use to live on for the rest of their life, and they're hoping they'll run out of life before they run out of money. And so it's stressful to see that go down. And so there's actually a dual benefit that can happen by selling or moving anyway, taking some of those assets from the retirement account and taking a lump sum and paying off the mortgage. And so now some significant cash flow is freed up. So there's two stressors that are eliminated. One, there's less concern about the value of the account going down as far as going down with the market. Then the other is the stressor of this monthly mortgage payment. And so people find this very liberating, very freeing, and helps them sleep better at night, knowing that they don't have that mortgage payment and it's not hanging over their head. And so that's the benefit of doing a lump sum and just paying off the mortgage. Something else, though, that kind of irks me that most mortgage people don't even discuss with clients is just, so here's the scenario. Let's say that's played out over the last several years. So people have had appreciation in the value of their homes. They have some pretty significant equity. And then as things were appreciating, going up, interest rates were coming down. So people decide, oh, I'll refinance and I'll save $100 a month on my mortgage. And that's all well and good, but they still have a mortgage. And especially for retirees, as I mentioned, that's probably one of their biggest expenses. And then what happens with retirees, especially what I've seen is a lot of them, they have their two Social Security incomes, and that's it. They have very little cash. Most of their net worth is in the equity in their house. So once the first spouse dies, the lowest Social Security goes away. And so lots of people end up in this situation where now they don't have enough money to be able to pay their mortgage. And so they have to get a roommate, move in with family, sell the house to be able to live somewhere else. And so an alternative idea is they could get a reverse mortgage. And so instead of refinancing to get a lower payment, they can just pay it off all at once, get a reverse mortgage and eliminate the mortgage, at least eliminate the mortgage in the context that they don't have that mortgage payment. So yes, getting a reverse mortgage does have a mortgage on the house, but they don't have to make any payments on it. Now, there are lots of misunderstandings and misguided opinions, in my opinion, about reverse mortgages. Reverse mortgages primarily are intended to keep seniors in their homes. It's to help them stay in their homes. And as I was mentioning, what I've seen is lots of seniors, a majority of their wealth is in the equity of their home. So why not leverage that equity and get a reverse mortgage and eliminate the conventional mortgage and free up that monthly cash flow. So now they can breathe, they don't have that monthly mortgage payment. And then as long as they live in the home, they don't have to make that payment. But if they sell, they move out for whatever reason. So yes, then the mortgage comes due. Now, that can be a concern for people because instead of seeing the mortgage balance go down with a conventional loan, the mortgage balance actually goes up over time. hence the name reverse mortgage. Okay, but here's some verbal reassurance. The survivors will never have to pay more than the value of the house. So back in 2008, here's the perfect storm. So let's say people had a reverse mortgage and then house prices came down significantly to such a point. Let's say the reverse mortgage was 200,000 and the value of the home was 190. Okay, well, the beneficiaries, the survivors, would not have to pay any more than the value of the house, that 190,000. They wouldn't have to come up with the extra to fully cover the mortgage. And this is part of what makes the reverse mortgage unique, and its primary intention of being able to help seniors stay in their home is a government backing of those loans in that scenario that I just described, where the worst case scenario where the mortgage balance has been built up for several years and then person dies, and just before that, let's say the house values have come down, and so now there's this underwater upside down scenario. The beneficiaries can still rest at night knowing that they're not going to have to come up with additional money beyond the value of the house. They can sell the house, and then the bank, credit union, whoever, mortgage company would just take the loss, and there's government funding and backing and all of this that helps them cover the loss. So reverse mortgage is not for everyone, but it should be more frequently reviewed and more frequently discussed as an option to help people stay in their homes, help retirees, help seniors stay in their homes, and safely leverage and appropriately leverage the equity that they have in their house to be able to help them live longer or live in their home longer. Because in addition to the mortgage being eliminated, if they choose to do so, they could also draw a lump sum out. So they could get a reverse mortgage and pay off the mortgage. And then, depending on the overall, the balance, if there was a conventional mortgage to begin with and how much they can qualify for, they could potentially pull money out. And then that money could be put to work. It could be turned into an income stream in an annuity, or it could be put into something safe where it would just simply grow at 5 or 6% and still be protected from loss. There are multiple options there. So the reverse mortgage can be a very powerful financial tool. And if this is of interest to you, you think it might apply to you, feel free to contact me through the link in the description, and we can do a review of your situation and see if a reverse mortgage is indicated for you. I'm Troy Thompson, the Angel of Freedom. Thanks for watching.